Okay, here's our update on the broader markets. It is September 20th, Tuesday night. So we talk about this a lot. The move on Monday either gets reversed on Tuesday or you see follow through, whether bullish or bearish, or maybe even see some consolidation, which is usually what you see if you have a trending move on Monday. And so it was interesting because yesterday the futures had a bullish outside candle. But the S&P itself did not, because it didn't make a new low. But I mean, it almost made a new low, and so you could call this. So that's important, or I should say, in that case, it's more the spirit of it. So like this is basically a bullish outside candle. We didn't quite make a new low, but like we practically did. And more importantly, again, I'll just show it really quickly. The futures, you can see, actually did make a new low below Friday's low yesterday, and then reversed. So, and that's why I often also say do watch the futures as well, because that often gives you a clue into things, because there's so many more hours traded, but that could also be some noise too. And so, as I always say, take a look at the links in the description. You'll see Cycles 101. The previous video to get some context. I'm going to talk assuming you've already seen the Cycles 101 content, so we can kind of take a shortcut here. So this is really important because we're in very murky waters in terms of the cycle count. So again, this is Tuesday. We did make a new low today. I'll zoom in so that it's like crystal clear here, right? You can see this is your Tuesday candle. Very clear as it's zoomed in here now, that this candle makes a low below this candle, right? So we have another low, and so I talked about this in the weekend newsletter. We definitely thought this was our daily cycle low, and I'll actually add the 10-period moving average, right? We had a powerful swing low, and then we had literally 3 days of follow through, closed well above the 10-period moving average. If you wanted to draw a trend line down here, you could draw a trend line, have your fancy. It went over, it crossed all the criteria you would need to call it a daily cycle low, especially also considering it happened on day 54, which is relatively late in a daily cycle. I'll just zoom out here. You can see we did have another cycle that went 54 days, but you have short ones that are like 30, 40, 25 days even. So at 54 days, you're pretty stretched. Now, it is possible that this isn't really our daily cycle low, and this was just another failed rally, and this is our daily cycle low. The other interpretation is that this new daily cycle topped out on day 4. So that would be the most bearish way to look at this, right? Like the most bearish view is that we started this rally. It looked pretty convincing in real time. I mean, look at these 3 trend days, right? And then we just had a big gap down. You can see this level here marked very clearly between 40.85 and 40.38. And then we just had downside follow through since, right? Again, making a new low. And let's just see how much downside are we talking about. Even from the low of this candle to this low, we've gone down about another 2.5% from that low, right? And let's say from the gap down level, we've dropped about 5%. And from the peak, I think this is all important context, right? We've dropped about 7% now from this little rally. Obviously a much bigger drop down from there. And even, I don't want to belabor the point. We are in a downtrend, and this is important. This becomes another lower high compared to this one, or really this one, which is compared to this one, etc. And so this is going to be important to watch. We have the CPI print tomorrow, the CPI print was on last Tuesday, which is what caused this candle. We have the FOMC meeting tomorrow, and then we have the actual press conference at 2:30. So we have the announcement at 2 o'clock. Everyone is expecting 75 basis points. And then we have the press conference starting at 2:30, where we're going to want to see how hawkish or not hawkish do they sound, sort of thing. And so that's going to tell us, was this a new daily cycle? Because let me just play this out. If this was a new daily cycle that failed on day 4, that would mean we wouldn't expect our low. Let's just say we're going to get a short daily cycle, and it's going to be 20 days even, right? That would give us our low on about October 4th. And considering this is also important, we actually have a full 7 trading days after the Fed announcement tomorrow, right? So Thursday, Friday, and then all of next week is actually still September. So a lot of time left in September, and you can see going to October 5, or October 5th, that would leave us with a lot of time for downside, because that would mean we wouldn't expect our low until early October. So that would be a pretty bearish interpretation. Versus, right, like the alternative is we're making our daily cycle low here. And so if we were going to get a 20-day cycle, we wouldn't expect that until mid to late October. Now, this is also important. So the way this would work is we're going to want to see a swing low tomorrow. So we're going to want to close above 38.76. Very simple level. The math is very simple. And I won't go through the other indices in nearly as much detail, because look at the charts. Like, you pull up a chart for the other ones, the Qs, IWM, any ETF you want. It's the same principle. So we're going to want to cross above 38.76. That would give you a daily swing low, because we would be making a high above the low that marks this. We'd be making a high above the high of the candle that marks the low, which is now this candle from today, Tuesday. So a lot rides on that Fed meeting tomorrow, obviously, and the Fed announcement. So we'll see how that plays out. That's the daily chart. And then if you look at the weekly, so we talked about bullish and bearish outside candles, that kind of thing. Well, also important to note that today, I'll just go back to the daily, was right. So it's interesting, right? Because today did right. I guess the futures did end up making a new low. So remember, we talked about the outside candles. That applies on every time frame, and the higher the time frame, the more important. Like, if you have a monthly outside candle, that's a really big signal, and it's a much bigger signal than an hourly outside candle, right? Because there are obviously many, many hourly candles within a monthly candle. And so we're now looking at outside weekly candles. So this is our weekly chart. I'll zoom in here so that it's like really crystal clear. I'll just stretch this. So these are our weekly candles here. So this is last week. We had a big bearish outside candle, and that was caused by that gap down and big down move from the CPI print, right? The candles before the gap formed this high, and the candles after the gap form the low. That's incredibly important to understand. Like, outside candles happen on every time frame. They're happening all the time. And there's a ton of alpha there, because it's a very high probability pattern. And one that was introduced, I'd say the way you think about it is through the strat. So if you're not familiar with that, just go hashtag the strat on Twitter. You'll find a ton of free content, a lot of resources to learn. And so the week before that, we had a bullish outside candle, but it was green. So the week of September 6th, we had a green bullish outside candle, which stopped this decline, which arrested this decline. And then we followed that up this week, last week, with a bearish outside candle. So, and that's very rare. That's incredibly rare, especially on a weekly time frame, to have 2 outside candles in a row in opposite directions. Really, really not a good look. And now we've made a low below last week's low. And so again, that is our setup for a potential outside candle, because we're now green. Now just barely, because we've pulled back so much, and we're like really an ugly doji kind of thing. But that's important to understand. If we get bullish follow through from the Fed, that sets us up for another bullish outside candle, right? It's possible. Like, I know that sounds crazy. That would be 3 bullish outside that would be 3 outside candles. Not all bullish, right? There was one bit bullish. Last week's was bearish. Imagine if we got a bullish one this week, because that's what we're setting up for. We've already made the new low, and this is week 14 of the weekly cycle. So this is going to be interesting. Because even if we get that bullish outside candle, it doesn't mean that the weekly cycle decline has stopped. I mean, this didn't stop it, right? We could get another reversal next week. I mean, I think the uber point is, and I'll zoom out here now, is we're in uber volatility right now, right? And the other thing I'll say is an outside candle is another word for a fake breakdown or a false breakout, right? That's what happens on that lower time frame, right? Like if I go back to that daily, you could call this move a false breakout. Again, that's your high on the outside candle, and this forms your low. They come together to make that one candle on the weekly. And so we're seeing we've made the low right now. Are we going to get a few daily candles that are going to, and again, I talked about this gap is going to be really attractive in terms of a move up. It'll probably offer resistance on the underside, and we could see price move rapidly, quick 50-point move. If you catch that in the futures, that could be really nice eating right there. And so my sense is the weekly cycle decline is continuing. It's week 14. Now, keep in mind, last weekly cycle ended on week 16. Incredibly short. And it caught a lot of people off guard, right? It was not myself included. And when I say caught me off guard in the sense that, like, and that's why I focus so specifically on price action. I observed we had a weekly swing low, right? But it was like, but wait, that's on week 16. That's like super early, especially when we got this candle that, like, you know, this is a bearish signal. But then we got this follow through, and it's like, oh, especially when you get this candle that makes a low below these. These were 3 tough trading weeks, but ultimately just consolidation when you really think about the broader context. These 3 candles consolidating within this one, essentially. And so we're going to watch this closely. We're going to follow the price action. There's no reason why we couldn't be getting a weekly cycle low here on week 14. That's not my base case. If anything, there's no way for us to know until we see what that announcement is at 2 p.m. Tomorrow, and of course the subsequent press conference. More important, not necessarily what they say, but how the market reacts. When we see that, we'll have a better sense. But in my mind, like, that would really throw a lot of people off if this became a weekly cycle low, and there's no reason it can't happen. And if we look at the monthly candles, very important what's happening here. I hope you can see this. I hope you've watched enough videos on this channel that, like, something is jumping out to you. We're red on the month. That's important. And I'll just zoom out here. We're red on all time frames. The daily doesn't matter as much. But, well, actually, we were red on all time frames last week. We're now green on the weekly, so not quite. But we're red on the monthly, which is important. We have this massive upper wick, which we knew about because we know we have this pullback on the daily and weekly, which is causing this wick on the monthly. And we know this monthly was green at one point, right? And then we had enough of a pullback on the lower time frames that we're now red. And we're threatening to make new lows. That's what this thing wants to do. That's what it's telling you it wants to do. Doesn't mean we get there, right? What we could see is this FOMC induced rally just essentially create a doji type candle, right? So we would need to go above 39.36 to go green. That's step 1. So we go above this line here. I'll zoom in. We'll go above here, and then this would start to go green. And then we'd have to see, do we go all the way back to the highs, or do we keep a little wick here because we're not able to make up all the price, because we're not able to make up all the advance by the end of September. And then we'll have to see. The other alternative, I mean, again, look at where, all things being equal, this is right now heading lower, right? But we know there's a huge catalyst tomorrow that could sway things one direction or another. So we have to see how that plays out. And so if it is a bearish reaction, it seems to me we'd be at 36.47 pretty quickly. Not tomorrow, but that would put us on a path there very quickly. The 10-month moving average is declining. And again, I talked about this in previous videos. This is a lower high. This would just become another lower high. And after a lower high, you expect a lower low is the expectation. So that's the play-by-play on the broader markets. And I'll finally just look at TNX really quickly, which is the 10-year yield. I think this is really important to start to keep an eye on. And so let's see. Where does it look like we are in the cycle, right? So like I'm going to kind of do this in real time here. So This definitely was a weekly cycle that probably ended around here, right? So that's 18 weeks. And again, these things don't have to have specific bands. I see a lot of people focus a lot on that. Like, oh, what is it? What is the count usually for gold? What's the count usually for this? It's like, focus on the price action. You focus too myopically on counts. So this is an important swing low right here, right? Again, that's 13 weeks though. So that seems like, oh, well, that's so short. Focus on the price action. That's 22 weeks. And so we're in a new weekly cycle by my math. It is week 7, right? And so let's say we get a 20, this is just, now this part is just pure speculation, how long the cycle is going to last. But right, this is week 1, 2, 3, 4, 5, 6, 7. Now, look at this like crazy green action. Obviously, we're going to get a pullback, and this is the weekly chart. Again, this is the 10-year Treasury yield, the yield itself. So as this goes higher, the yield goes higher. So it's at 3.572, making new multi-month highs now. But we've got 7 green weeks in a row. We know that can't last. We know that's how this thing moves, though. I mean, look at this cycle where it just ran up to a week 18 top, right? This was a very long cycle. So all we can do is watch the price action here for any signals of a swing high, and that's the weekly. And if we look at the monthly, I mean, that's really telling. And I'll switch to the yearly view. This is actually, if you look at each candle being a year, this was a big signal. Once we went above 1.745, we made a new high above last year's low. And what does that actually mean? That makes 2020 a massive yearly swing low. That's important to understand. That's a really big signal. Now, does it mean we get back to like 15%? I don't think so. I mean, we could. There's no way we could get there because the government could never service the trillions and trillions of dollars of debt. Especially, I mean, even at like 7 or 8%, let alone 15. But we could still see a lot of pain coming up here to call it the even 5%. Wow. But I just look at this chart. I hope again you've seen enough videos on this channel that this is a really powerful signal. Now it can reverse. Now for it to reverse, we need a reversal on the lower time frames, like on the weekly. Really, it'll need to come on the daily first. And this is certainly extended. I mean, look, we're gonna get a more meaningful pullback at some point. Now we have had red days. We've had all green weeks, but we've had red days interspersed. But this is going to be important to watch because a lot of people talk about this. You generally don't have stocks bottom while you have rates rising, especially at this pace. I mean, let's see what the percentage increase has been for this period. Wow, 37%. That's a pretty substantial increase. So that's the play for the broader markets. That 2:00 announcement is everything tomorrow.